Wow, folks, it seems it seems as if the SEC is definitely going after the short sellers. I mean, this time around, it seems like it is no joke. Like seriously, it's even beyond the SEC, as we talked about many times. And I'm going to share with you in this video another perfect indication of why exactly we should actually pay a lot more attention around what is about to happen when it comes to the way short selling works, the way lending and borrowing works, because ultimately it is not even specifically dedicated to AMC stock, but it's really towards the broader market. And because this might face, this constitute a big risk, people above on high places really want to revamp and totally change the way short selling works and short selling affect stocks in the US markets. So let's go over it, folks. We already covered that. Well, you already know the SEC is after hedge funds. They are after hedge funds. They are on top of hedge funds. They are breeding on the necks of hedge funds. They are they are going after them with a massive, aggressive attraction. We heard yesterday, all right? Actually today, this article was published today, March 1st. Hedge funds shorting stocks face more disclosure rules from the SEC. I mean, if they thought things were supposed to be easy on them, even with the new rules, well, they have to think twice now because, well, hedge funds, specifically hedge funds and large investors, will have to disclose significantly more information about the stocks they short under a new plan from the SEC. So this is still at the proposal stage, all right? Keep that in mind. Institutional money managers will have to submit monthly filings with details on large equity short positions that we already know. If you hold 2.5% of the total outstanding shares of any stock out there and you are short, you will have to disclose that. So on top of that, investors will also have to disclose some daily activity affecting their bets. While most of these details will remain confidential, the SEC wants to make some aggregate data about large positions in specific securities available to the public. This is where it gets a little bit more interesting. Short selling has been a staple for US equities markets for years, but it's been political lightning rod following the meme stock mania that began in January 2021, with retail investors banding together via online message boards and bought up stocks like GameStop Corp and AMC Stock as well. Because of this specific part here, that's why I say we should give a lot more attention here, because the DOJ, the SEC, the FFTC, and all of these federal agencies, including the White House Market Risk Council. I mean, this comes from way top, because this is part of why some investors have been losing a ton of money, including in AMC stock for the last year and even before that. So it's really, really a matter of make it or break it. And that's why we're hearing a lot from the SEC. Now, the plan is now to actually require from them a lot more details to make it even harder for them, So under the new proposal, investors will have to report details including the name of the security, information about the short position at the end of the month, daily trading activity that affects the fund's gross short position for each date of settlement, daily trading activity that affects the fund's gross short position. So it doesn't matter if you're a short position. If you're short today and if you double down yesterday, you will have to disclose everything that was affecting that specific stock that you're shorting. Based on the data gathered, the SEC will then make it public. It will make public the aggregated short position that money managers have in a specific security. Man, this is outstanding. This is a holy grail. Why? Let me pause here for a second. On top of that, they're going to also make available to the public the percentage of the aggregate gross short positions that's hedged. So not only we as retail investors, if you want to go after shorts that are potentially doubling down for no specific logical reason, let's just go back 1 year ago, all right? If we knew that AMC stock was shorted not at 20% or 25%, or even GameStop was shorted at not 100%, but at maybe 200 or 500%, well, there's going to be a lot more people buying the stock. But on top of that, it makes things clear, it makes things transparent, it makes things easier for everyone, those wanting to short sell and those willing to buy. Because if I see a short interest on the data or specific stock high, and keep in mind, this is an aggregate data, meaning it's all of the short positions from all the short sellers giving me this single data point, meaning I can know exactly how shorted the stock is, and I can make my due diligence, and then I can decide to go against the short sellers if I feel as if this is not something that was supposed to be this shorted. So it's going to make short selling a lot more difficult, because not only people are going to know exactly what is happening on a daily basis, but on top of that, it means it's also going to be a lot more difficult to hide it. Why? Because you have to report every single trading activity affecting that specific stock on a daily basis and on a monthly basis on top of that if you are a big player on the market. So I guess it will be very difficult to hide those. And yeah, so you can expect once this is actually implemented, we don't know yet when, but it's going to be a matter of a few weeks, maybe top a month. And then when it gets into action, well, it's going to be, first of all, covering time. All right. Because when it's covering time, whew, it's moon time, man. It's moon time, baby.